Let's return now to our coverage of the SAA crisis and further insight now. Aviation analyst and commentator Des Latham joins us. Des, good evening to you. We'll talk about the new planes arriving and those that are being sold in just a moment. But, as Barry Bateman was saying to us earlier, National Treasury still not providing bridging finance of R2 billion that the company needs to continue operations. At this point, with the deadline of Saturday approaching, how much trouble is SAA in?
Well, they're in big trouble because they've had a few deadlines before. The problem for government is if they bail SAA out, the ratings agencies will take a dim view of that. And they've been warned that any more bailouts of public entities without some kind, or state-owned entities, without some kind of change in the entity, critical change, it will lead to immediate removal, probably, and a drop in the ratings, which will mean that we won't be able to access loans at the moment 7% and 7.5%. We'll be removed from the bond board in London, and South Africa will emerge from this period as something like Venezuela. In other words, high-risk loans will only be in our ambit.
All right, so the impact on the macro economy is also fairly terrifying. The bridging finance, though, back to that R2 billion, Jan 18, that's this coming Saturday, is the deadline. Let's look into the crystal ball. If it can't secure financing by then, is it too easy a knot to tie to say the airline will simply cease operation?
No, it's too easy. I mean, what we'll find happening is that the routes will immediately be scaled back. And the announcement about the sale of aircraft, I'm interested in how Mattison is saying that, because we know that of those aircraft you named, we have the registration numbers, and we've been watching them as pilots. And only one of the list of 9 is not flying constantly on the routes already, for example, to New York. So we're dealing with A340-600s, which take nearly 300 people, and A340-300s, which are around 220, 250 passengers. And these are large aircraft, and they use 25% more fuel.
This is what Barry Bateman was telling us in the report a little bit earlier. What do you call them? Gas guzzlers?
Well, they're old-fashioned in that they're not just 4-engine, but they just use more fuel. Their design, the aerodynamic design is different. The newer planes save up to a quarter of operational cost. That is when they're flying.
So this is the A350-900S. You know more about these things than I do. This is a good thing. I mean, that A350 are similar to the likes of Qatar and Emirates. They're using this new modern fleet of aircraft, which are cheaper to run.
Yes. Now, SAA has got itself in a spot of bother over this, as we know. They have 64 planes. Many of them are cargo. To give you an idea of scale here, Ethiopian Airlines has more than 112. They have 116 planes, also an African airliner. Just to use a comparison, Ethiopian Airlines made $270 million profit last financial year. We still have not got last financial year's numbers out of SAA. We have the previous year, where they made over $5 billion loss. So the numbers being floated around are significant. SAA owes now in the region of 27 billion rand. They owed 17 billion rand 2 years ago. They built a 10 billion debt over 2 years. Now, you're asking a question about what would you do in terms of operations. Anyone looking at this airliner has to see significant changes amongst management, the board definitely, and in the structure.
But surely we're seeing the start of those significant changes, given that the airline is in business rescue. I mean, isn't that what everybody wanted, or at least a constituency wanted? It seems to have been welcomed by many people.
That's happened, but the government has kicked this can down the road so much. Sorry to use that analogy, but that's what's happened over the last 24 months in particular. Since Dudu Myeni was chased out of the senior leadership, they've tried to make changes inside, but there are systematic problems there. There are 3 main problems. The one is geography. SAA operates at the bottom end of Africa. They can't get throughput east to west, which is what drives the Ethiopian growth, and even Kenyan Airlines to some extent. Secondly, there's a governance issue in terms of management principle there. And thirdly, costs. Every spare part is dollars. And you mentioned the engine. What he's talking about there is not an engine, it's a backup engine that they switch on before the aircraft switches on its engines. Now, that we are told that there's up to 12, maybe 15 Airbus engines for sale, which are in the region of 13 million US each. So how that is not going to factor into the cash flow when they're running out of cash is an interesting prognosis from the business rescue practitioner. However, the spare parts, which we told are also up for sale, some of them, these are millions and millions of dollars worth of spare parts. Of course, we're not talking about a fire sale here in terms of business, but we're talking about an urgent need to create some cash.
Let me squeeze one more in. We've got business rescue practitioners. We all understand that as we speak, they have been in consultation with the major unions at SAA. That's going to be a tough meeting.
Well, they were in consultation in November when there was a strike. And then a number of managers got the 189 letters, but no union members. We were told that in April this year, a back pay was going to be paid based on the change, the percentage increases back to May last year for the workers. Where are they going to get the cash in April? Who's going to wave the magic wand? Where's this money going to come from? So I think we are fooling ourselves here. Those in the industry know what I'm talking about. Us as aviation obsessives, if you like, are highly aware of what's been going on in the SAA for some time. Since 2011, it has not made a profit.
Des Latham, thank you very much indeed. We'll